Hello, everybody. Hello and welcome. Welcome to day 5. I hope you all are doing good. Hi. Let's just take a look here at the chat. Hello, Ken. Hi. Yeah, it's so nice to see so many of you here. Welcome again to everybody. John from cold Port Elizabeth, South Africa. Suzanne. Hi, Suzanne. William. Jeff from Orlando, John Boy from the UK, Colin, Port Elizabeth, Dodd from Canada, Jeff from Texas, Gary, Minnesota, Ken from Colorado, Javad from Vancouver, Devon from England, Tommy from Scotland, and so on. Paul from India, Michael representing New York State. Hello, Michael. Tiakoe from Senegal. Hi, Bastian from Suriname. Hi. Welcome, everybody. So also a big hello to our friends watching our stream on YouTube and on Facebook. So feel free to use the chat there as well. So again, today we are on day 5. So without further ado, again, today with us is Adrian Jones. You already know him. He is a full-time Forex trader and CEO here at Tradeology. So let's see what he has in store for us today. Hello, Adrian. How are you doing today?
Hi, Mir. Hello, everyone. Thanks for joining me today. How are you doing? I can't believe, it seems like a blink of an eye and we're back together again. So it's day 5. And many of you that are on here today I recognize from the previous session. So welcome back. And I'm sure there might even be some people that are joining us for the first time today. There's just so many on here. I can't see everybody at once. But if you are first time here, please do go and have a look at some of the other day's presentations. They're still up for a bit. I'll tell you where to get hold of them in just a moment. Or if you have been on them before and you just want to go for a review or recap of what we've already discussed, then please feel free to do so. I'll share that link with you shortly. And if it's the first time, I'd advise that you follow the sequence of the days so that today's session and the other days make sense to you, or you might not fully grasp what we're talking about. But for those of you who've been with me for the last few days, I'm sure you will be able to follow along nicely. And without too much of ado, I'm just going to see if I can get to share my screen here just for a second. There's a few things I have to set up here. And there we go. 5-day Forex challenge. All right, so I've got a few presentations open there, but this one is the one we want. And we're on day 5 today. I'm Adrian Jones, as Emir mentioned, and welcome. So let's just do a quick review. So we've covered quite a bit over the last few days. We've had 2 systems, the Profit Wave and the Astral Trend Finder. Some of you may have just had a chance to trade with one or maybe both of these so far. And we've also looked at analyses of traders generally to see where you as a trader might fit in. We've covered support and resistance and candle patterns and related them to the systems. And today, what we're going to do is we're going to do a review of some trades that were sent in to me. Thanks, guys, for sending in your trades. I've had a few more since Friday, since our last interaction. And I've got a few of those that I'll be sharing with you today. We're going to have a preview of a new tool, which I mentioned Friday. I'm going to be sharing with you. We've decided to extend it by just an extra day, and that gives me time just to put together this new tool and a few other things that I'll discuss just now for you, and how to increase probabilities with chart patterns. That's the next topic we're going to be discussing today. We'll have a Q&A, and then I have another announcement also near the end, so please wait for that. Let's start then with the review of some charts sent to me in the last couple of days. There's been many that have been sent in to me, but I realize we can't be on here for hours and hours, and it is Sunday, so today's will probably be a bit longer than usual, so please settle in with a cup of tea or coffee, and let's go through a few things. Let me just move this Zoom thing out the way. I've got a little taskbar here. So here's one from Terry. He's just letting us know he took his first trade with a profit wave. Terry, you might be on here. If you are, hello. Started late to the party, he says, but still made $1,018. And he set out where his entry and stop loss and target was. And that was with the profit wave. So I don't see the actual entry signified on the chart, but thank you for sharing that with us, Terry. That's very encouraging. And we've got one from Tom. Says, thanks a lot. He's enjoying the presentations. What he likes about Profit Wave is it gives clear entry, stop loss, and profit targets. Screen is clear. And the mistake he did in the past was by putting together various systems, trying to put them together himself and make up a system, which added to confusion. He used Profit Wave on Thursday for the 5-minute pound USD. Got 2 trades during the trading window, the European window, 18 pips and 16 pips. And he says that to him, that shows that Profit Wave is good at pinpointing continuation trades during an uptrend on a faster time frame. He used it on his demo account, and he sent a screenshot of his 2 trades. So there we could see we've got your stop down here, Tom. You entered the trade over here just shortly after this arrow appeared, and it had just turned blue, and you put your take profit target 18 pips away. Fantastic. Obviously you hit that. One thing you could have done extra there, Tom, was just to have also as an extra confirmation, or to give you that other entry, you could have also looked at this point over here as being an area of resistance and drawn a line, and perhaps way down here only it would have been entered, as we would have discussed. I think it was on day 2. But either way, it did play out. Well done. And here's your second trade, also a bullish trade. And I'm just trying to zoom in here a little bit. So you entered here, you put your stop down here, and you took your take profit up here. The stop in this case seemed to be quite far down. I would have put it a little bit higher, just below, just below this part over here, a few pips below, and in just a little bit closer, probably with the target as well. But anyway, well done. That turned out well for you, and thanks for sharing that with us. And next we've got Appy. He says he went gaga on his dying account. Thanks so much. My account is now in 2 figures. Well done. Now you can see you're trading with a small account. That's fine. You're obviously practicing, and you've highlighted that you've made these 2 trades here. And this one looks like when you took the screenshot, it was just about to hit your target there. So thanks for that, Appy. Taeyang, I hope I'm pronouncing your name correctly there, Taeyang. The pound Japanese yen trade Asian session on the 9th of the 7th. And you put your stop up here. It looks like you entered the trade here and set your target around this region here. Anyway, you made a profit of 50 pips, and that was with the Astral Trend Finder. So that actually played out well. Look at that. It went straight down. No problems for you there. Thank you for sharing that with us. And from Tim, and he's mentioning that on the 9th of the 7th, 7 p.m., went into profit, never reached the stop and reversing. What are good exit strategies for the system, he asks. Ride it out or wait until the stop is met, or take the loss and enter into a new buy signal. Thank you, Tim. All right, so Tim, this is, hopefully everyone can see this, but try to stretch it out. If I did it much more, it would be difficult, even more difficult to see. But on the red line here, the horizontal line with the profit wave system, you looks like you entered the trade here, you set your target here, and you had your stop loss here. Now the stop looks fine. It looks like it's just a little bit above the area there. I would have maybe made it just a little bit higher. It's almost right on the top of that wick. Anyway, you seem to have entered it okay. You could have also entered this probably a lot sooner, around this point. Oh, wait, there's the arrow, sorry, around this point over here, somewhere around there. You could have entered as well, in which case your stop loss would have been probably up here. But this was probably where it was at the time that you entered the trade, within 6 candles of that, all the signals being there. And it looks like you also were maybe waiting for this area of support to be broken through before the trade was taken, which is good. Now, as the trade progressed, the question is, as we said, not all trades are going to be exact winners, right? But we can still mitigate any potential losses and take maybe even a profit if we're managing the trade correctly. And what we see here is that the price did move down and then started moving back up. Now, Tim's asking, should he just leave it now, wait till his stop is hit, or should he have managed the trade somehow differently at some point here? There's a couple of things there, Tim. The first is, as it's moving down, you want to just also be cognizant of any other signals that you might be getting to say that there's an imminent price reversal of some sort. And one of those signals could be that the indicators at the bottom change direction, right? So they start changing, and you could see here that the step MA started changing, or sorry, the MACD here started changing direction. And you've got now these green histograms here. The blue line had crossed above the red line. So that would be one indication that things are changing. And if you didn't want to stay in the trade, to perhaps at that point get out. The other would be to see if it's not too clear yet, but to see if the red line here crosses back above the blue line on the main chart. That would be another indication that it's going to be heading up, and it looks like it was just around about over here somewhere that it did. So if you were to get out on that trade and you were being super conservative, which is what we want to be at times, once it played out and you saw it had been trailing along for quite some time, and then the signals started changing, you would get out at that point, even if your target hasn't been hit. And I wouldn't wait for my stop loss to be hit either. I'd look at that and say, right, the signals are clearly lining up otherwise. So let me get out at this point in, even if it's just a couple of pips profit, just so that I can conserve my account there. And it's still taken as a win, right? So if you get out a little bit early, as long as you're following the rules and you are looking at the signals, if you get out, you could still classify that as a win. We don't have to hit our target every single time. We'd like to, that's what the rules say. But if the signals are saying do something different, then we do want to get out. The other thing you could have done, Tim, was to trail your stop loss down. So at a certain point here, once you saw that the market had been moving for a bit downwards, you could open up your trade in your MT4 platform, double click on the trade that you see there that's still going. I think right double click, and then it'll open up your order form again. On that, you'll see your stop loss and so on will appear. Simply adjust your stop loss to be at an equal or just under this level of your entry point, so that if price does reverse against you, you'll either come out with a small profit or at least at break even. And that way you will have conserved your account. So I wouldn't wait until the stop loss, and that actually applies for all the trades too. I think I should have mentioned earlier, you can trade your stop down. Means you can bring it down at a certain level, just bring it down as the market comes down. But wait for price to play out a little bit, give it a bit of time to move, at least a few candles before you do that, because sometimes it might swing back up and then back down again. And if you bring it too close to entry before there's been any major moves, you could be taken out then, right? So just give it a bit of time to play out, but this would have been sufficient time there to bring it down, and you can't lose then, right? So if it does come back up and hit you, then it's going to hit your entry point. All right, so thank you, Tim. And let's move on to somebody else's here. This is from Jim. It says, I do not normally trade on a Friday. I thought I'd give the system a go. I look at the charts on a 30-minute time frame, support and resistance, and enter on the 1 minute, which is a very fast time frame to start on. But you say you tried the FTSE and the Dow. Interesting, thank you. And the results attached show the Astra system to be very useful indeed. Excellent. So you use the Astra system here, Jim. And over here, you could see you've made 1, 2, 3, 4, 5, 6 I think these are all related to the same system. 1, 2, 3, 4, 5, 6, all in a row, all positive, and that adds up to close to about $90 or so. So well done. That's very good trading there. And Arlindo Gama wrote, hello, Arlindo. I placed 2 trades today with the profit wave system, one on the Aussie Japanese yen 15-minute, one on silver 1 hour. Another one on silver is right next to the support area, but these are 2 demo trades. Today being Friday, not expecting big moves. Next week, he'll place more trades. So thank you for that, for sharing that with us, Arlina. I do appreciate that, and interesting to see that you're also trading on silver, which you can trade on the MT4 platform. You'll see there's a commodities section when you're looking to open up a chart, whatever pair it is. You could scroll down to commodities. You'll get gold, silver, and a few others there. Of course, I still suggest if you are a beginner trader, if you're still new, stick to the majors, as I would have mentioned in the first few webinars. But well done for you for doing that, Orlando. And let's see. So we've gone through a few of them. So just another follow on from where we stopped last. So we want to ask, how realistic is it really for a system to continuously have a good win rate? And I've mentioned before that you're never going to get a system that's 100% a winner all the time. It's impossible. But we want to improve our odds when trading. And we saw in our last session that certain patterns, we looked at candlestick patterns, can help identify where the market might be heading next. And we learned that a change in the trend or lack of trend, or a change in fundamental analysis, or change, which is basically news events and so on, some unexpected news could change the market, or a change in your analysis tools, what the tools on your screen are telling you, just as I just discussed in reviewing one of those trades. Or a change in the market psychology can affect the outcome of your trading. So if you're aware of all of these other aspects, then at least to a certain extent, we've touched the surface really of it, but at least I'm creating an awareness, hopefully for you, that there's a lot of things at play. And if you know at least the fundamentals, some of the basics, then you have a fighting chance of being better at succeeding with your trades. And that our job as traders is to make informed decisions with balanced judgment and minimal bias. So we're being objective, and that we should use a few things to look at the market at all times. So we take into cognizance all these factors, we use a balanced judgment, and we do it objectively. All right, so that's where the psychology kind of comes into play as well, the discipline. We remove ourselves from any emotions and so on, and we look at things objectively. What do the charts say? And especially as technical traders, which is what we're doing now, we're looking at technical patterns and so on, that indicator patterns and that appear on our screen, and we're looking at what signals they give us, right? So we also saw briefly in one of the previous sessions that we're looking for the current trend and momentum, and that ideally from the higher time frame we drop down to the lower time frame, and we could see on the higher time frame, you could see that the market's either going up or down, and that if you're trading in the direction of the trend, you'd expect that there would be more, if the market's moving up, more buy trade opportunities, and if you're going down, more sell trade opportunities, and trying to trade in the direction of the trend generally. And we looked at the support and resistance levels and how they could influence you exiting or entering into a trade. And we looked at the price patterns. We're going to look at more now. We've looked at the candlestick patterns before, and that I call this trading, triangle trading, basically market structure type trading. Now, we would know then how to analyze and adapt our trading plan. So we've got to be adaptable. It's nice to sit in front of a screen with a screenshot of a particular moment in time, but we know that the market is moving constantly. We don't know exactly what's going to happen, but we've got tools that can help us to determine which direction it might go in and what to do if it goes in a particular direction or even against us. So we've got all these tools in our arsenal. So we looked at that we can look at certain patterns. that make up the psychology of the market, so to speak, that other traders, institutions, and so on are also looking at these patterns. And the majority of traders are not retail traders, like I say, the banks and whatever you, and they're looking at the same patterns. They've got all the same lines and things drawn on their chart. So if you know what they are looking at, more or less, you can determine with a certain amount of foresight where other traders, the big traders that are actually influencing the majority of the moves, are headed, what their psychology is, what are they thinking when they're doing this, and that will help you with your trading also. So as I mentioned, we get a good idea of where the market is heading when we do that. And today I'm going to discuss chart patterns, some particular types of chart patterns. But before we do, I want to remind you that, as I mentioned before, tomorrow I've got an extra day. And on that day, I'm going to give you a special tool for having been here, for following me for the last few days. And I'm calling it the Trader's Companion app. It's going to be free, and it's going to be for you to use for as long as you want. And over time, you'll be able to build up your own analysis and record of your trading results with any system. I've mentioned before how important it is to treat your trading like a business. Have that mindset of a business person while trading, so that you're not just trading for the fun and so on. If you're really serious about it, which I think majority of you are, because you're here, you're looking at making an extra income, you're making, of bringing in some additional revenue into your monthly budget, perhaps even setting yourself up so that one day you can be a full-time trader yourself, that you don't have to work, or assist you with your retirement or towards your saving goals and so on. You want to treat it like a business. You want to have fun, of course. With any job, you need to do something that's your passion. But in order to do that, you also have to be able to keep a track of where you've been and where you're going and where you are, so that you know where you're going, right? So over a certain time, once you've developed a few trades and you start analyzing patterns in your own trading behavior, or even with particular systems and so on, you can look back and be able to see it at a glance. And this tool that I'm going to give you tomorrow will be able to set all that out for you. And Emir helped me develop this for you. The presenter at the beginning of this presentation, Emir, is one of the traders with us here at Tradeology, and he helped me put this together. So tomorrow with me, he's going to present this to you. And what I thought tomorrow was also, before we get onto the chart patterns, is that I think it's only fair that for the candlestick patterns, I know that many of you would have been looking at them saying, oh, that was too quick for me. I didn't have time to grasp that, even though I've read through the stuff or listened to it. And even now with today's session, you might think, okay, this is went a bit fast. I picked up a few things, but not the others. So tomorrow, together with that trading companion, I'm going to also put up the notes from the chart patterns that I'm going to show you today, as well as from the candle patterns that we did on day 4, so that you can download them all and can print them out and keep them with you. That's something I'm sure that would be useful to you. I saw somebody did ask, and I thought should have done that. So I'm going to get that all ready for you tomorrow. So you'll be able to download everything at once there. So let me just continue. Before I do, any questions, Emir? My sound, everything okay? Any issues?
Yeah, all great so far.
Oh, good. Okay, so we're all still here and can hear me. That's great. Okay, so what I'll cover here today are some of my favorite chart patterns that will deliver a higher than average probability for a successful trade. Now, again, we're made up of all types of traders here, some new, some beginners, some advanced, and so on. So many might be familiar with many of these patterns. Some will be familiar with some of them, not all of them, and some are not familiar with any of them. So it's essential that if we're going to do our 5-day trading challenge, that you should be aware of some of these patterns, no matter what level of trading you're at. And I'm going to go through these, and then I'm going to have a quick look at the charts and actually look at them. So there's a few slides and so on. So please bear with me as I go through it. I'll try and do it as succinctly as I can, but move through it as rapidly as I can as well. Now, these patterns are reliable and many traders watch for these, as I mentioned. Because of the number of traders waiting to trade these patterns, they have a kind of self-fulfilling prophecy thing going on. So as I mentioned, we know that the banking institutions, the hedge funds, the really big players in the market, they also use patterns like this. And if they're using similar patterns, we almost have the self-fulfilling prophecy type thing going on where you could more or less predict where they might be placing their trades and be able to follow them, or where a trade should be placed. And so it's very useful to know these patterns. And they're more likely to work out simply because the big money trades do them too. So just as I mentioned now, these patterns are important because when you see these patterns develop, you will have a better idea which way the market will most likely move as a result. Now, there are various types of patterns. Some are or continuation patterns. There are counter trend or reversal patterns. There are neutral patterns in which the market can break out in either direction. I'm going to go through each of these briefly with you. So when we're looking at trend following patterns, in other words, patterns that follow the general trend of the market, we are looking at what's known as pennants, flags, and rectangles. And we have trend reversal patterns, which would be known as wedges, head and shoulders patterns, double tops and bottoms. And we'll get to these in just a moment. And we have neutral patterns also, which would include symmetrical triangles, ascending, descending triangles, and rectangles. And so let's just start with the continuation patterns. Whoop. Now, the following chart patterns are patterns you will find in the trend, and I'm going to show you some images just now, which hopefully will simplify this for you. And as the market takes a break from the big moves and rest of it, we'll find one of these patterns emerge. That are a good indication that the market hasn't finished its trend, and the next trade you should be looking at will be with the recent trend direction. So it's about to continue in the same direction. We have something called poles, and these almost always have a pole attached to them. And what is that? That means prior to the pattern, the market leading up to it will have moved into the pattern from above or below. And it was clearly trending in one direction, and the pattern that follows is a resting phase before it carries on its way, right? So here's an image that just simplifies things a little bit for you. And on the left here, you can see that the trend was heading up, and there was this big movement up, which we could look at as a pole. And then the market came down, went back up, came back down, and then continued upwards, right? And here we have a pole leading into a chart formation that was trending downwards, went back up, came back down, went back up, and then continued down, right? So the pole is important for these. Now, the market occasionally just wanders its way into some chart formations, it seems. These formations are still good setups, but they don't have continuation momentum, a pattern with a pole will have. Now, let's look at pennants. As the market is pausing, you will find price retracing into a narrower and narrower configuration. The market squeezes itself from both the top and bottom, and the pennant shows up just before the market takes off in its original direction. I'll show you that in just a moment. So making this a pennant, you will find that markets leading into the formation creates a pole, a strong move that leads into the pattern itself. So here we have, for example, on a downward momentum, we see a pole here, and the market is squeezing. We have it going back up, down, but not as far down as before, up, but not quite as far up as before, and then all the way down. And if you wanted to draw a line across the highs of this movement here, and underneath the lows of the movement, you'll see it forms this kind of pennant. So you can think of it as a pole and a pennant. And on the other side here, we have the market moving up, down, up, but not as high, down, but not as low, and then taking off. And if you had to draw a line across the highs here and across just under the lows here, you'll see that you've got this pennant formation. And at these points here where it breaks through that line, you can expect most times that the market might move in that particular direction, either down or up in this case. right? So bearish pennant formation on a real chart. So let's just see how this would look on a chart. And here we have a pole. You can more or less make it out. You could even draw a line for yourself on the chart if you wanted to. And we've got a bearish pennant formation. So as price moved, you eventually found that it was heading towards this pennant shape. And if you were on this candle at that point, you'd be expecting, well, it's either going to move up or down. We saw that the market was moving down prior with the pole. Once it breaks through that level there, it could continue in the direction downwards, which it did right there, right? So we called that a breakout and a move downwards. And similarly, when looking for an upward trend, in this case, there was a trend upwards here with a pole, strong movement upwards. And over a bit of time, one could have drawn on the lows here and on the highs here. If you were at this point over here, you'd be saying, well, there's a pennant type shape, and I'm just going to wait for the market to break, see if it'll break above. And then once it did, it moved straight up again. So there we have a breakout over there, right? And now let's have a look at flag patterns. This is a take a break pattern as well, so to speak. It starts off generally with a large quick move forming a fairly steep pole. Then comes a flag formation as it gently moves up and down slightly against the initial move. And to be a true flag, the formation takes place between two equally separated lines, two almost parallel lines, a small support and resistance channel. One could look at it, and I'll show you that in a moment. Now, the bear flag is formed as a slightly rising formation, while a bull flag is a slightly falling formation. After a large initial market move, there is a period of what's called covering, which means traders who were in the initial large move are closing their positions. There's some form of consolidation. Some are closing their positions while others are opening new positions in the same direction as the initial move. This simultaneous buying and selling is like a tug of war between the bulls and the bears, and the market doesn't have the momentum to move in either way while this is happening. Once the open positions are covered, the remaining open positions, and with the addition of new positions, will usually force price to take off in its initial direction. So let's just have a look here again. So here we have a pole on the left here. We have got a pole moving down, and we can see that price is moving up slightly. And if you had to draw a line across the highs and the lows there, you'd see it's almost like a channel, similar size, almost equidistant. And as price moves down, if it had to break below that, then you would expect it to move further down. And the exact opposite, as markets been moving up, it came down, went slightly up, came down. And if one had to draw a line across the highs there and under the lows here, you'd see that once price break through over here, it's expected then to pull off. So the difference with the pennant is, of course, the pennant looks more like triangular kind of in shape on the other side, where the flag is more perpendicular or like a channel, equidistant, almost equidistant channel. It don't have to be exactly equidistant. Now, the bearish flag formation on the real chart. So here you would expect, for example, a pole where you see these candles moving down. You could almost draw a line there and say that that's a pole. And then as price moved, let's say you were at this candle here, you would have drawn a line and you would have drawn a line underneath here, and you'd see there's almost an equidistant channel that price is moving between. And then you'd be waiting to see, now, would price break through the channel downwards? Because remember, we're coming down. And if it did at that point, you could expect that the market could break out downwards, which in this case, it did. Relatively massive candle there, but similar type patterns will play out on charts all the time. Here's a smaller example of a bullish flag formation. And you can see the market was heading upwards, and you could expect that this move here would be a pole, and then it started moving slightly downwards. But if you had to draw a line across the highs here and under the lows, you can see how we had an equidistant almost channel formed there. And because you knew the market was coming from below, it was moving upwards, you'd expect that if it had to break through this part here, that's the point at which it would take off. And of course, then it did over here, and you'd be expecting it to head higher. Now, we've got a rectangle. It's a fancy term for a range, basically. As price slows down after a bigger move, it wants to drift sideways for a bit. This drifting will have a price floating up and down as regular business in the world influences price, but it's pretty stable. So a rectangle is price action that you can sandwich between two horizontal lines, support and resistance levels. You will find this after a big move, but also after the major market participants go to sleep on a smaller time frame. So like with our lessons before, where I mentioned with the astral trend finder, as well as the profit wave, etc., what you really want to do if you're on the lower time frames is towards the end of the day session, which would be roughly around this time onwards for the New York session, then expect for the most part that the markets might just go kind of sideways and range. And if you had to draw a pattern there, you would probably most times find a rectangular type pattern. And these are periods of equilibrium, and others would say it's a period of indecision. Either way, it's a pause in the market that has a clearly defined high and low. Now, it can be very narrow, as in a very consolidated market, or a little bit wider, where there's actual price movement inside of it. And this is a classic formation for a breakout type of trade. So let's have a look here. So here on the left here, we've got what we call a bear rectangle. So price might have come down, and then you'll see here almost horizontally. The highs are almost horizontal, the lows are almost horizontal. And then if price had to move down after coming down, you'd expect that breakout in that direction. And just the opposite. Here we have the pole, we have price moving equidistantly between these two and then moving up. So pretty much a rectangle, if you could look at it like that. And once it broke through, there we have it. So very similar to a pennant that we saw earlier, kind of similar to a flag, but this represents a consolidation. The market's really ranging. Nothing much is happening here, and you're waiting for a breakout. Now, let's have a look at this on a real chart. Bearish rectangle formation. And we can see, clearly it's a type of pole having formed here. And then, it goes down and then whoops, just moves sideways. And while it's moving sideways, it's just kind of almost in a perfect range. It just goes up, down, up, down between these. And you can't really see, is price going to go up or down? So had you drawn a line across the chart at the top there and at the bottom of this, you'd know that it's come from the top. You'd know that it's consolidating and that it most likely will move down. So the question is when? You're waiting for that breakout, for price to move strongly below that point. And right there, that happens, is a breakout, and then it continues downwards again. All right, so that gives you an idea of when that might happen. And you could clearly then also see where that might happen. Now, exactly the opposite on a bullish, we could call this the pole, and then boom, just sideways. And up, down, up, so we'd be waiting, knowing that it's come from below, for it to break above. And once it closes above, not just pierces and comes back, but actually closes above, then we know, well, there's been a breakout. And okay, a bit of a retracement here. You could even have extended this slightly across, but clearly then there was a breakout to the upside there. Now, reversal patterns. The market can't move in one direction all the time. You'll never find that there's just a straight line up or a straight line down or a straight line to the side, right? It will always go up and down, up and down, up and down, but it will progressively move either upwards or downwards. So we know that it must change direction from time to time. And that's where these reversal patterns come in play. So many changes in direction are simply what we call pullbacks. And there's others that we call complete reversals. So as we know that the trend is, for example, going up, that we can expect that price will incrementally move upwards. We know that as it does so in a kind of a step fashion. And that there are times that it will move down slightly and then move up a bit further and then move down a little bit, move up a little bit. And there's opportunities also in these pullbacks or reversals. And we can find how or where to find these reversals by using reversal patterns. Now, the trick is knowing the difference between the two. Pullback is difficult and usually unprofitable to trade, but there's good money in trading reversals. So let me just go through and explain that now. Knowing a couple of high probability chart patterns will help you decide when you would trade a reversal instead of leaving it alone as a minor correction. So there might just be a minor correction in the market, and then it moves forward. So how do you know the difference? And we're going to look at some of these formations that can help us tell the difference. And one is what's called a wedge. It's one of my favorite patterns. It happens almost every time a decent reversal is about to happen. So you can watch out for this with eagle eyes, as I've said there. Now, in a bullish reversal wedge, price must be trending lower. And at the bottom of the trend, the last couple of lows are very shallow. I'll show you just now an example of that, almost kind of bottoming out. The first low is followed by a slightly lower low. All right. And the highs, however, are not as shallow. They keep falling more dramatically than the lows. The opposite is true of the bearish wedge. Now, as I mentioned, to keep this all in mind might be a little bit difficult to try to make notes. I will share all of this with you. So don't worry, all of these notes here will be shared with you. The opposite is true of the bearish wedge, a topping out of price. As price narrows, then a reversal happens. So let's just have a look at this. So here we have a wedge type formation taking place here. And you can see the market is going incrementally higher. There's the pole, incrementally higher. And then it breaks through here, and a bullish wedge, it breaks through to the opposite direction. So you see price is heading, eventually it's breaking out in the opposite direction to where the pole is moving, right? So the pole was moving upwards. Now remember, in all these other patterns, we were expecting it to break out to the top, or if it was coming down, to break out to the bottom. With these type patterns, we're also on the lookout for potential downward move, opposite from the upward move here, and a bullish move, the opposite from the initial bearish move here, right? And let's just have a look at this on the chart. So we have a bearish formation on a real chart, wedge formation. So you can see this is the pole here, and price was moving upwards. The overall trend you'll see on the chart here remains upwards eventually. It remains upwards. But we're looking at the reversal. So when it does reverse, how do we know that we can go for a quick sell trade somewhere? Well, we're waiting for it to go up, slowly incrementally going up. And if you had to draw a line on the top of the highs and below the lows here, you'd see this kind of wedge formation taking place. And if it had to break down below, then you'd know that that is a breakout move, a bearish breakout move, a counter trend type situation. And then you'd be able to look out for entering a trade there. Now, exactly the opposite with the bullish wedge formation, where the initial trend is bearish downwards. And you can see eventually on the left, the right-hand side of the chart here, it would have continued downwards. But for a moment, we can see that there's going to be a pullback. And here we've got the pole. We've drawn our, if we were sitting over here, for example, in real time, we would have drawn this line here, that line there, and we'd be waiting to see now where would it break out. And if it broke out above this pattern, you could say, well, I'm in for a reversal here. I've got an opportunity to go for a buy trade. All right. We also have what's very familiar to many people, head and shoulders patterns, but I know that many of us, as I said, are on different levels here. So let's go through the basics here. The head and shoulders formation might be the single most important chart pattern out there. It's fun to say and fun to trade. Right? There are traders that look for this formation almost exclusively, and they do very well trading it. And it's exactly what it sounds like. You've got a bearish head and shoulders. I'll show you just now. Consists of a high being the left shoulder, followed by a higher high, making the head, and then it comes back down again. Finally, there's another high that is lower than the head, and this will form a head and shoulders. I'll show this to you on an image just now. And the two lows formed by price on either side of the head is called the neckline, and a trend line is drawn connecting them. And when price breaks below, you have a short trade. So let's just see over here. So you see there's the pole going upwards here, and price reverses down, goes up. So you've got a higher high, goes down, goes up again, but this high is lower than this high. See, so you could see that, well, it's called the head. We've got the left shoulder here, the right shoulder, and if you had to draw a line across these lows here, and it had to break, price had to break through this neckline, then you would know that it's going to continue downwards, a reversal type pattern. And the theory behind the head and shoulders pattern follows the rule of a trend. In an uptrend, you will find the market makes a series of higher highs and higher lows. And in a downtrend, the market makes a series of lower highs and lower lows, a kind of staircase looking or step type pattern. Now, head and shoulders is a bearish pattern, meaning that we're looking out for bearish trades or to sell when we see these types of patterns. What follows is a lower high. This interrupts the pattern of an uptrend and is the beginning of a downtrend. So the head and shoulders pattern assumes that the beginning of a new trend direction will have some kind of follow through. Now the bullish version of the pattern is called the inverted head and shoulders, as its name suggests. We have here on the right, on the left, the head and shoulders pattern, and on the right, the inverse or inverted head and shoulders pattern. So we see the pole, price moves up, comes down, moves up. But in each case, these lows here are higher than this low here. So we've got the head here, the shoulders, and if we had to draw a line here, we've got the neckline. And as it moves back up again, because it's inverted, remember this is a bullish signal, meaning that we're looking out to buy here. Once the neckline is broken here, market should then, one would expect, take off in an upward direction. And let's just see if we could see a few examples on the chart. So here we have the head and shoulders formation. And, you know, after looking at the charts quite a lot, and this is why it's important that one should be looking at charts all the time, you start seeing these patterns. Okay? I'm pointing them out to you now, but you will start seeing the patterns as you get progressively more experienced by looking at them, right? And so here we could see that price had moved up, down, up, down, up, down, and we could see that that was clearly a high here, and on either side of it were two lower highs being made. And if you had to draw a line like I did there, you'd know that that's the neckline, and one would expect then a reversal type pattern, to it being a reversal pattern, that should it break through that neckline, you have a breakout, and a move normally follows downwards. So you'd be on the lookout for a sell trade, bearish move there. And the inverted head and shoulders pattern on the chart. So again, I've marked off in green here. Price moved up, moved down here, moved up, moved right down, moved up, moved down. And at that point, one could say, well, there's a higher low, there's a lower low, there's another higher low. So you can see the pattern that I just drawn on your screen earlier. We've got our shoulders here, the head here, and if we had to draw a line here, the neckline, one could then be waiting for a breakout move to the upside. So there's a bullish type pattern. And clearly that's what happened right here. Right, so we've also got what's known as double tops and bottoms. Double tops and bottoms are very common chart patterns that carry a lot of weight with traders because of their frequency. A double top represents the letter M, right? And a double bottom resembles the letter W on your chart. So if you had to draw the lines that look like an M or a W. With a double top, price finds a high or level of resistance, and after it's rejected from there, it comes back to test it again. Second rejection from that level will often send price on a large downward ride. Now, double bottom is the exact opposite. Price will find level of support that is quickly tested. The second time, once price is rejected again of support, it will take off and move much farther upward the second time. And let's just have a look at that on the chart here. So here, unlike the the head and shoulders, which has got a clear head, shoulders, and so on, this one, price would move upwards. Here you see a pole, comes down, upwards, down, and then reverses to the bottom. You might say, well, this looks similar to flag or some of the other rectangular type patterns. It does to a certain extent, but once it reaches down here, you can see that we have what's a clear M type formation, and the exact opposite with the double bottom, where you have a W. You can clearly see that on the screen, but let's have a look at it on the charts. And we have a double top formation on a real chart. And over here, you can see, if you follow my mouse, the price moved up, down, up, and then continued down there again. And we could draw a line underneath here and say, well, that's where it broke through and then it was continuing downwards. So that's the double top. Double bottom, we're looking out for a W type pattern. And here you can see price move down, up, down, equidistant bottoms here, and up, and form this W type pattern. And again, if you wanted to draw a line across here, you'd be waiting for a breakout there, and up it goes. Right? So we also have what's known as neutral patterns. And there are a few. Let's look at the rectangle. It's with the rectangle, there's a range from a meandering market. Price drifts sideways, finds itself in a high and low range where it gets stuck. Now, this is, you can think of it as a sandwich between two horizontal lines, support and resistance. A neutral rectangle can occur in the off sessions or in a market that is preparing itself for upcoming news of some kind of event. So as I said, when near the end of the session, sometimes you find these rectangular type shapes, or during the day, if there was some major news announcement, President Trump or one of the Reserve banks or someone, Bank of England or something, was going to make a big announcement. Oftentimes, although the market might have been moving strongly before that, suddenly you see there's this kind of pause, and we can see a rectangular type pattern develop. It can be very narrow in a very consolidated market where there's nothing much happening, or a little wider where there's actual price movement. And again, similar to what we saw earlier, this is a classical formation of a breakout type trade. And this breakout can occur when the new market session suddenly becomes active, when the market opens up fully, like the London session earlier in the day. And it can also break out as a result of the news release. So they've been waiting for this news, and now the news has been released, and boom, off it goes. Now, as I mentioned before, just with news releases, that's why I'd stay out just before the trade, the news release, and I'd stay out just after the news release, because it can swing wildly afterwards. Even if you anticipate that it might go in one direction, it can actually often surprise you, because there might have been certain buy-in already in the market and so on. So just to be safe, about 15 minutes to half an hour before a major news release, if you know there's one coming, or just after, just rather stay out of the market at that stage. Now, the breakout of a neutral rectangle can easily be in either direction, so we will prepare ourselves for either a buy trade or a sell trade. So again, here we have, as we mentioned before, it's been going on for quite a while. It's been ranging. So we're not sure at this stage, will it go up or down? But if it had to break out in either direction underneath these lines, then we know, well, there's a fair chance it's going to continue in that direction. So it could go down and then break out up here, or it could just go down here. We don't know. The market's still in consolidation. So here we go. Here's a neutral rectangle formation that breaks out to the downside on a real chart. So you can see the market was heading upwards fairly strongly. Then suddenly there was this consolidation, most likely waiting for a news announcement. This was on a 15-minute chart. So you can see this was even a few hours before the news announcement. And we could have drawn a line across the top and the bottoms here. And it could have gone in either direction. One would then have presumed, if you were sitting here, you would know which way it's going. So you wouldn't be entering a trade just yet. And then suddenly it broke through over here. And now you'd know, once it's gone below that line, that, well, there's a breakout to the downside. And just look at that opportunity there. And exactly the opposite when it breaks out to the upside. So market had moved up, but then consolidated, moved between these almost equidistant channels for quite a while, and then boom, broke out over here and carried on upwards. So, and again, most likely this one is the cause of a news release. Now we've got ascending, descending triangles. This is a pattern that is favored as a continuation pattern, but over the years it is found that there's no real edge to this pattern as far as regards its ability to keep the market moving. In descending triangle, price will drop in a bear trend and then take a breather. This resting phase will have a price narrowing, but the lows it makes in the formation will be roughly the same, while the highs will be getting progressively lower and lower. And I'll show you that in a moment. From here, the market can break out in either direction. The flat bottom and falling highs suggest the bears have a bigger impact on the bulls, but its relation to the wedge formation sees the market simply bottoming out and ready for a reversal. The opposite is true for an ascending triangle. And let's just go straight to the image so that you can get a better version of that. So you could see in this case, we have our lows fairly flat here and a series of lower highs. and we're waiting for it to break out in either direction. And here we have the pole. The highs are the same, more or less height. We have a low over here, and as this pattern is forming, we are not sure yet whether it's going to break out to the high or low, and it could go in either way. So descending triangle, ascending triangle on the right here. Now, the descending triangle formation with a breakout to the upside on a real chart, and here we could see clearly here's a pole here as well, and price is moving. So as you're drawing this line, you're seeing, well, this is the kind of pattern, and then it breaks out and moves upwards. And with the descending triangle, not sure where it's going to break. There it broke out below and moves downwards. We also have symmetrical triangles, very similar to the pennant. The only difference is that the symmetrical triangle does not have a pole leading into the formation. The absence of a pole changes the probability of this being a continuation pattern to a neutral pattern. So without that pole that we looked at earlier that shows us the direction of the trend, this doesn't really have a pole. You're not sure. It's kind of neutral. And the price can come from above the pattern or from below, and even sometimes from the side of the pattern. The market either wanders in a symmetrical triangle form above or from below, but it does it with very little conviction. There's not these big moves. The market will meander into it. But once it does, the range it forms will narrow down. So we'll have a look at that now. So we've got a symmetrical triangle from above, and it kind of gets increasingly smaller and smaller, and then breaks out in either direction. And here, well, it's not clear really. There's the pole there, and it's kind of just gone down here. The pole might be indicating that it had previously been going downwards, but then it kind of squeezes itself and then breaks out to either side. Now, let's have a look at that on a chart. You can see here, price was moving down, but there's no clear pole. It's kind of also sideways here, and then eventually breaks out to the downside. And here's one with a breakout to the upside. So there's no clear pole here, but if one had been looking at price at this point here, you'd have drawn this, and then boom, it broke out to the upside. So when applied in conjunction with other technical analysis tools or developed system of trading, it can definitely improve your trading performance by serving as a confirmation to the signals or a warning sign that entering a trade might be a bad idea. So it's not, their use is not per se part of the rules of any of the systems that I've shown you this week, or any other system that you might be using, unless it's explicitly said that that is what you're waiting for. But they are like candle patterns, like support resistance. These patterns can definitely serve to confirm your signal. So if you're not sure, and whenever in doubt, as I always say, stay out, but this might lessen your doubt, or it might even warn you that actually you were fully convinced that this would be a good trade, but now looking at the patterns, you're not so convinced anymore. Excuse me. And so we've got all these patterns that we've just gone through: continuation chart patterns, bullish patterns, bearish patterns, the reversal chart patterns. Remember the head and shoulders and the inverted head and shoulders and so on, and the M and the W's, and the neutral chart patterns, bullish and bearish. And I'm going to give you this full report, so don't worry. But it's hopefully for some of you who might not have been too familiar with all or some of these, or maybe none of them, patterns, when you're looking at a chart next, you would be grasping that there are these other patterns that are also playing out on the charts, and that are all can be very important for you. And you, by training your eye, by looking at the charts, it's not something I can magically voodoo for you. You know, unfortunately, you would have to look at the charts and try them out yourself. It's one of those things that you just have to, the more you look at the charts, the more you'll be able to identify these patterns, and it'll become second nature to you once looking at them, right? And that is something that many traders don't know. They're just looking at the signal. You know, did the MACD say go long or short, whatever you, that's great, but have a look at some of these other patterns also. Now, let me just pause there and ask, you know, are any of you currently using any structural patterns that I've covered so far? Just curious to know the feedback from those of you who are on here. Have any of you used patterns like this in the past? And perhaps, Amir, if you could check for me, please, as I've got so many things going on my screen that I'm not able to see all the chats.
Of course. So there are different answers. Let's say Rakesh, no. Benji, yes. Tosin, no. Colin, yes, many. Mason, just head and shoulders. John, yes, reversal patterns. Farah, only double tops and bottoms. Charlie, no, I'm very new to trading. So a mixed bag there.
A mixed bag. All right. So as I suspected, some would have used them. Some may not have. For those of you who have, perhaps I've covered a lot of what you know already. Maybe, hopefully, you've learned something extra. For those of you who knew nothing, because I've got to cater for everyone, I hope that you would have learned something then from what we've just discussed. So let me just go quickly to the charts to take a look at this. And this is just going to take me a second. Sorry, because I might just stop sharing for a second while I try and figure out how to get this next thing open. And hello again. And people are still here. That's great. And then we go back to sharing the screen. All right, so back again. And now I'm not going to spend too much time on this because I know that we've gone through a lot. And I think once you get the patterns and you start looking at them on your charts, you're going to, for yourself, be able to see them, right? But we're going to just have a quick, it's almost like a recap. Now we're on, again, the profit wave system. This applies to any system, right? The astral, whatever other system you've got. Now, on this particular chart, there were some potential buy entries at these points here that I pointed out with this vertical red line. And prior to that, we looked at earlier, some certain candlestick patterns would have been forming that would have indicated, even in real time at that time, where the price was likely to go. You could see some here, I haven't marked them all off, but where the blue here, certain candlestick patterns that might be able to influence you. You've got all this indicators from the profit wave system on your chart here. So you're waiting for confirmation from them. There we see the little arrow appear, blue, and blue is above red. And here we have blue histogram, blue line above the red, and blue line above the red here. So just by looking at that, you would know also that, all right, we're setting up for a buy trade. But here's an extra confirmation. We saw before that we're looking at the resistance level, and there we would have drawn one across there. We would also know there's a support level at the bottom here. So should price reverse in the opposite direction, we know where it may be heading to. And here you could see basically an M formation. Remember, we discussed that before, and boom, up it went. Now the market here was really ranging. You can see it really came into it, ranging. So having drawn this without even having the profit wave system on here, we could get an indication that we could have entered a trade even over here, right? And it's quite easy to draw these lines. Just go to your trend tool here. Let me just randomly, draw one. So you could take it from the bottom to the top there, and, from the top to the bottom of the wick there. I normally draw mine from the top wick to the bottom wick that you can see, and others will draw it from the open or the close. But I prefer to draw mine from the top of the wicks. So you could see there's another M-type formation having formed there. But, you could play around with your charts and draw them. And, as one moved across the screen here, as the market, you could see this would have been considered a pole here, basically, right? As we discussed there. We've got another level here that I think I must have drawn from before, from another high of the day or for the week there. But as price started moving through here, you could see that there's, actually, we don't even need this line here. This support line here would have done, this was from a previous high somewhere before. And here we can see that the market, basically at this point here, you would have been drawing this across here, saying, oh, look what's happening here. I'm waiting for, we know that price has moved up. There's your pole. we'll be waiting for a breakout to the upside, potentially. And that would have happened at this level over here, just after actually all these other indicators would have come into alignment. You could see there was a signal here. Now, had you not taken that signal, you would have still been able to get into the trade at the break of this resistance line, or coincidentally, the same break of this pattern here with the pole and upwards. Now, that would have been a very small trade. Well, when I say small, because the lows over here somewhere. Let me just lean in and see 11 pips, and you would have been taken out in profit around here. But that's great. You would have seen that coming, right? And that is an indication that there is a potential trade setting up there. There's also a very weak, but one could start seeing all kinds of patterns in the market. But if you look over here, let me just see if this does play out properly on the screen. Just looking at it now as well. We can mark this off here and say, look, there's a high there. There's a low there. And can you see what I'm busy drawing here, guys? Another one here. Another one here. Who can see what pattern that might be there? Let's just see if you guys have been paying attention. Anyone want to tell me what that pattern looks like there? Can you see the answers for me there, Mir, please?
Yes. Just want to give them a bit of time to type in before we start reading. So I think 100% correct. Everybody who wrote something, they wrote H and S or Head and Shoulders.
Excellent.
So Head and Shoulders,
Excellent.
Head and Shoulders, Head and Shoulders. So yeah, everybody's.
You guys are listening to me. Excellent. So yes, so as this happened to play out over here, one would have been looking around this region here for a breakout of the neckline, right? And there's the pattern that was going up. And we're looking at Head and Shoulders as a reversal pattern, right? So as it broke through this line that you could have drawn through there, and coincidentally, we could have a look at our system just to double check. So if you were looking in here and you knew that there was a Head and Shoulders pattern just before, and you hadn't yet got into the trade, you might have wanted to wait also for this pattern to have moved, eventually played out. See another M here as well, played out to the downside. So we knew that when this signal came and that our other indicators below, it's shown us for the profit wave system that there's a signal to go short, that all those conditions were met, and we got this extra confirmation through the HNS, the Head and Shoulders pattern breakout below the neckline here, right? So well done, guys. I'm really proud of you for having seen that. For those of you who didn't, one just really has to keep looking at the charts, and I'd suggest just drawing lines as much as you can. And in fact, the more you draw, the more other patterns you'll see coming out, and play around with the lines, the trend lines. Very easy to do. Just press on the, I'm just doing it again for you there, and you just drag it from one point to another. And you'll see these patterns coming up over and over and over again, and you'll be wondering, well, why didn't I see them before? And it's just a case of practicing with them. So even if you had nothing else, no system whatsoever, you have a fighting chance of at least knowing where the market might be heading. But I'd advise, of course, that you make use of these patterns in conjunction with some other regular rules or systems, as they don't always play out exactly the way they said here. So we went to the charts to have a look, and let's just see if there's been any questions that have been coming back from anyone as far as any of this is concerned.
Yes, Adrian, there were a few. First comes from Richard. If you're aiming for a 1-to-1 profit target of plus 40 pips, and the market goes only to 32 and reverses, what do you do to exit? Protect your bank and take a profit? Regards, Richard.
Richard, there's probably a lot of different scenarios that can play out before it gets to that point, or actually at that point. And so what do you do to get out? I think Earlier in the presentation, I would have showed you also an example sent in by somebody else. What you can do while you're going, especially a 40 pip move, that's quite a big move. As the market is moving downwards, you want to be taking your stop loss and have it, if it has moved down at least, let's say, halfway to the target, you could move your stop loss down to break-even point, or just, if you're going in a sell trade, just below your break-even, so that if the market did suddenly reverse back, you would at least be taken out in profit, or at least for no profit, no loss at break-even, right? The other is, if you found that you were in a trend, in some kind of pattern, if you saw a pattern playing out, and that the market would take off in an opposite direction, so you're taking a counter trend trade, a reversal trade, and the market started moving against you again, if it broke through that pattern, you would then at that point have the option to exit. So, there's nobody going to have a gun to your head to say, do not exit. Yeah. If you feel that you're worried about it, or that you're in doubt, you are in profit anyway, close it out. Just close the trade. You're in profit, take what you get. And the other is also, if any of the other indicators that you've seen a major shift, such as, before they were all lining up for the profit wave, for example, showing you to get into a downtrend, but now suddenly all of the arrows pointing up, the blue lines above the red line on all the indicators, and everything is looking as if it's heading up, then at that point you want to get out as well. Now the market is clearly going to go in the other direction. So trail your stops if you can. If you're unsure, or if there's been a pattern broken while you're in the trade that shows that it's going to reverse in the other direction and maybe stop you out, simply close the trade. And if any of the indicators give you an indication that you should be entering into a buy trade opportunity soon, and you're in a sell trade, and vice versa, then you could exit at that point as well. Okay. Hopefully I've answered that for you, Richard.
Thanks, Adrian. So let's just get one more coming from Juan. With the wedge patterns, could one place a buy stop or a sell stop before they actually break out?
Yes, actually a good point. I should have mentioned that you can press a buy or do set a buy stop or a sell stop, as we had shown in what day was it? I think it was day 2. If those of you are not sure how to do that, could have a look at my day 2 recording. I'll show you exactly how to do that. A pending order, and you can then select it as being a buy stop or a sell stop, depending on which way the market might go. And you can actually set it both ways. So if you weren't sure, you could set it both ways, and then just close out the one that didn't happen. In that way, you wouldn't go into the trade until it was taken. But I would also be wary, in the sense that, as I mentioned, you want to use these patterns in conjunction with your systems, or a system of some sort. And so not just on their own necessarily. You want some additional corroboration, or they are more a corroboration of your signals that you're getting from the system. So as long as these system signals are also in play, then I would set the buy stop or the pending order, sell stop, whichever direction. Hopefully was it Bol? I didn't get the name there, Emil.
That was one, yeah.
One. Yep. Okay, thank you, one. All right. And it's been going for quite a while, but I've got just some other things to let you know again. So when you make a trade, any trade, if you happen to, the markets will open now, if you happen to be around, you want to send me a trade with Snapshot, please do send it to me at support@acceleratingprofits.com. You could just say the 5-day challenge. Now, the challenge is basically come to an end, but I'm still interested in looking at these trades and seeing, more importantly, that you've taken a step for your purposes more than mine, because I want to be sure that, everything we talk about, you take some kind of a step. That psychologically, just taking that step of making a trade and even sending it to me primes you to say that I'm treating this seriously, I'm ready to trade, whether you're winning or losing, doesn't matter, you've taken that step. And that's important for me. Now, in the next session, I'm also going to announce the winners of one of my $750 system prizes. In fact, shortly after this, because I do want to give people sufficient notice before I announce it. I'm going to be sending out the announcements for that. So you probably, the emails would come in just now. It's one of my systems in the past that would have been valued at $750. A few of you are going to win. And for the secret vault system, a few of you are going to win that to the value of $250 also. That's for making comments on my page. And I have to say, I've had, must be over 300 comments now. And they've all been excellent. I think about 95% of people there have said how well they've perceived and taken in the training so far. So I've got to thank you for that. The other few have said just hello and so on. So it seems like overwhelmingly everybody at least has found value in it. And for that, I'm grateful for. And as I mentioned, tomorrow I'm going to announce now I've got something else I want to show you just now, but I just want to let you know about this. This is the winners for tomorrow. And after this, you can also register for my next session. Remember, I'm going to be showing you the Trader's Companion. You're going to get that free tomorrow. You're also going to get the notes from today's webinar about the chart patterns, as well as the previous one about the candlestick patterns. So you're going to get all of that information together with this companion app, which I think any trader, no matter where you are, from beginner to advanced, are going to be able to use that, especially custom designed one for you tomorrow, free, no catch whatsoever. But I just want to get serious for a moment about something else that you should be involved in. Also, you know, they're free there for everyone to see. On the comments that have been coming through and on the emails I've been getting, even from people sending in their statements, they've all been asking me, you know, Adrian, how long is this going on for? Well, it's a 5-day thing. I've extended it by an extra day. And I'm going to also, just to thank you, I'm giving you away these extra things tomorrow. But the question is coming up all the time is, so how do I carry on? You know, I enjoy this. I want to get more. And we know that I've just really scratched the surface of trading with the last few days, but I've given you hopefully a fighting chance with your trading, with the systems and everything else. How can you be involved more? Or how can I be involved with you more? Over time. And I've got a program that I've put together called the Accelerating Profits Program. And this program is divided into a series of masterclasses. It's a continuation of what we've been covering so far, and which I will cover tomorrow more, again, free, don't worry. You'll still be getting that as well. But I want to show you about this because in a couple of days, in any case, for those who aren't on here, they won't be aware, but for those who are, and I'm going to be announcing that I've got this program in place. And this program, those who do join me for that program, it's going to include quite a lot of stuff. It's going to include another professional grade system. If you thought the Astral Trend Finder and the Profit Wave were good, which I'm glad everybody did because they are, there's another professional grade system that's going to form part of this Accelerating Profits program. And I'm going to, every week, for at least a period of 8 weeks, but we'll go on as long as necessary, I'm going to include a stack of similar type systems and reports and bonuses and education. Every week, there's going to be another 12 of them. Each of these are valued just like the systems that I have given away now. These are extra systems, which one can use similar to the ones that you've got, but different, each with their own peculiarities. The money-bound system, for example, would be valued at $250. This is the value, but not what I'm asking anyone to pay for to be part of the program, but I'll be giving it away to those who are part of the program. The Forex Profit Ribbon, the SRT system and indicator, also valued at $250 as what I call the rejection spike report, a full report on how to cover your risk in much more detail than what we've gone into at the moment. The limitless cash system, another system that's, they've got fancy names, don't they? But they're all different systems and excellent systems. As I mentioned, you're not going to get anything that I don't think is past my standards. And another one called the Rapid Dollar System. We've got another one called the Profit Spring, which was put together by some of you may have, if you were students of Toshka Rachev, have also received this one. We've got another one for those of you who are students of Nicola Delic. He's kindly let me use something called the dark numbers, which goes into Elliott waves and that's Elliott wave theory, and more specifically around certain levels and numbers that he's worked out in his days trading. And we've got something called the Fib Cash Compass, valued at $250. And that's that there. And we've got something called the Fibonacci Code Report. We haven't even touched on Fibonacci yet. And that's a whole thing in itself. Even if you think you know a lot about Fibonacci, there's a lot that I'm sure you might not have realized. And we've got something called the ACE technique. This was actually created by one of my students, a farmer, who gave up farming and made himself a fortune trading Forex. A lot of the other of my students actually have taken part in previous programs of mine, have gone on to become world trading champions. They've gone on to have, from running small businesses, and I don't want to mention names because that wouldn't be fair to them, but they've gone from running tiny businesses, we're really battling 24 hours a day, working their backsides off, and now are fully independent and have become full-time traders. Others are working at hedge funds. It's, you know, this is the kind of educational level and support and whatever you that I would give to my students. We've got something else called the PIP key also, and yet another one valued at $250, right? So what I'll be offering is a accelerating profit system, a package that includes full videos on how to trade with this other professional grade system that I'm calling the accelerating profit system, right? And instructions on how to trade it in every market condition, currency pair, time frame. That's in itself is valued at about $2,000. You'll also get unrestricted access to an exclusive private members area where you'll learn as much as you possibly can over a period of the program, which is at least 8 weeks long. So if you like what we were doing now, imagine continuing something similar for the next 8 weeks. And fast forward to 8 weeks from now, how much more profitable will you be and knowledgeable will you be as a trader? So that in itself is valued at $1,000. We've got support from other traders as well as myself that could be answering your trading questions. That valuation could be easily around $500. And there's a total synopsis of all the different free systems that we'll be giving out as bonuses, which have a value, but I'll be giving them as part of this program. Total value, in fact, of about $6,500. And I'm going to be offering that to you guys for $499. So there, you know, everything that I've given you to now, of course, it's free. There's no catch whatsoever to that. So I don't want you to think this is why I'm doing this. You can only have that if you do this. Not at all. But I know that most of the people that are on here are serious about trading. And I know that most of you have taken a step, at least for yourselves, and have actioned in some way demonstrating that you want to get going. And a lot of you, I mean, it must be the vast majority, have in some way or other asked me, how do I continue with it? And this is the best thing that I can think of for you right now. It's not a program that I've offered before. In some respects, I've offered parts before with my other systems. So even those who might have joined me just for a short while, for whatever reason, with any of my previous systems and programs and so on. This is a completely new program that I've designed for you guys for $499. And I can actually give you a quick breakdown of that once again, and then I'm going to show you something else which is very special. Got the accelerating profit system, the money bound system, Forex ribbon, the SRT, the rejection spike, the limitless cash system, rapid dollar system, profit spring, dark profit numbers, Fib cash numbers, Fibonacci system 8 technique, the PIP key, the membership, the live webinars. I haven't mentioned that every week for a period of 8 weeks. There'll be live webinars also every week. All the support. There's also a section that I haven't mentioned on here, a beginner section, where if you're new to trading, there's a whole section there that you can learn things about lot size, leverage, margin, you know, brokerage, all that kind of stuff inside of there. Tons of information, and that will just get you started. Then over the progress, over the next progressive weeks, for 8 weeks, we'll extend it even to 12 weeks. We're going to be giving you, when I say we, I mean myself and support from other traders. will be giving you a whole lot more as we start learning. Any of my previous students will know that I don't just show technique, I teach more about how to improve your general trading as we go through a particular technique. But there's something else that, and this is only for you guys for today, and I want to cover it with you because it will not be taken. You might get some emails a few days from now telling you about the Accelerating Profits program. But for you guys that are on your live, that have taken the time to sit here with me over the last few days or are interested, if you're not, no hard feelings. But if you are interested and you wanted to know how to do it, I've got what's called the Accelerating Profits Elite program. Now, this will include everything that I've just mentioned, all of that, plus what I'm calling the Accelerator Profit app. It's an automated trade assistant. It doesn't take the trade for you, but it'll pop up on your screen and say, Adrian, all the conditions for this system that I call the Accelerating Profit system have been met. Do you want to buy or sell? Yes or no? And you just press a button, it enters your stop loss, your take profit targets, everything is entered into at that point. And there's various settings, and I'll give a whole explanation on how that works, of course. And we also will then give group training just on that, in addition to everything else that you've seen on the Accelerating Profits program. You'll also be getting group training just on this particular app. We get a 30-minute call with me personally. So I'll do a one-on-one call with you. It's not a webinar type session with everyone on. For those who join the Elite program, they're going to get a 30-minute call with me personally. Within a few days, I'll schedule the call. We're all in different parts of the world and whatever, and I'm happy to sit with you personally for 30 minutes to get to know you a little bit better. I'm also going to organize a 1-hour coaching session with a pro trader. And I've got a few traders who are professional traders. You would have known their names. They will coach you for 1 hour in a particular area of Forex. And it might be that you're interested in a particular area. And then either myself or one of the others will coach you in that. You get 2 elite coaching calls in addition to that with another pro trader. You get 2 coaching calls where we will spend time together learning about the system, the app, or whatever it is you want to know. You get a lifetime access to the members area. You get a lifetime discount for any future products or systems that are going to come from Tradeology. You will be a VIP. You'll be in the Elite program. You're going to get an audio recording that's going to let you know about the psychology. It's going to help you with the psychological aspects of your trading. And you're going to get concierge support and dedicated trader assistance. And lifetime access to the page and training, whatever we give you, you'll have lifetime access to that, to review and go back at your own time. As I said, this includes what's on the left, plus all of this, and that will be for $750. And I couldn't think of any other way of reducing it further than that because of you'll see there's considerable time and people that I need to get involved also to help with this and to put it together. So the best, price-wise I could do for you guys, and it is only for you guys. This part here, by the way, will not be offered to anyone other than the people that are on this right now. The people that are on this right now will get all of this in a couple of days, or at least a day actually from now. They won't get anything further from that because I need people to take the step to show me that they're serious with it so that I know I can schedule my time for 1 hour coaching, for 2 hour coaching calls, for giving you concierge support and all the rest of it. Because of its nature, I'm not going to be able to do this with thousands of people, and neither do I want to. I want to do it with a limited select group of people that show me that they're really serious about changing their lives or improving their trading. And you're going to be able to find that, and it's only, this link is not going to go up anywhere. You're not going to find this link anywhere else. It's only on here, acceleratingprofits.com/VIP. Emir, if you're still there, could you put this into the chat, please, for those who are interested,
yes,
right?
No problem.
So once this presentation's over, this link is not going to go up on the record. It won't be up on the page tomorrow. It's not going to be anywhere else. It's just going to be for us that are on here now. In a few days' time, yes, I will be offering the Accelerator program, but not the elite program to anyone else. And basically, for a few dollars, really, if you look at it over the time period that we're going to spend 8 to 12 weeks together, plus all the coaching, plus everything else, you'll see that a lot of effort and work and time is going to go into this. So I know a lot of people are saying, oh, I knew there was a catch or something. No, there's no catch. Everything that you've had before, you get. Everything going forward, though, I'm sure you'd realize, if you're treating this like a business, like I do, that this is an investment in yourself. It's an investment in your trading. And if you thought that there was anything that I helped you with or gave you some kind of value with over the last few days, then without a doubt, we've just scratched the surface. You know, if you feel that I'm someone you could work with, or you would want to work with, I might not be to everyone's taste, that's fine. But if you do feel that, I'm giving you a chance before everybody else jumps on the bandwagon and tries to get in. You asked me, so I've prepared this for you, right? www.acceleratingprofits.com/VIP. And I just want to give everyone enough chance to type that in. This will only be available, by the way, for 24 hours. Because of the nature of our content challenge, it's only going to be available till this time tomorrow. After that, nobody's going to see it. In fact, everything else, you know, if you haven't watched any of those webinars, you still get access to all of that. All the webinars that we've done for the last week, and tomorrow I'll be giving away also that, the Trader's Companion. And I'll be covering a few other things with Emir tomorrow to further our education with that tool, but this won't be offered to anybody else that hasn't been on here already. Are there any questions that are coming through? Maybe I should just ask at this point.
There are regarding to the system. Is there any limitations in the number of people who can join?
To the system? Yes, there is actually. For the main system that I'm offering at $450, I'm going to limit that to 250 people. For the upgraded elite program, I will see how many people want to join that. I'm hoping that as many as are on here can possibly do that. And of course, I need to schedule. You can imagine if I'm trying to speak to everybody on here, there are only so many hours in the day and so many days in the week and so on and so forth. So as many people that want to register for now, I will make the time to speak to them. But that's why I'm not going to offer it after a day or two, because I simply won't have time to bring anybody else in to that program. So I have to offer it to those who are on here at the moment, and you will be the only people that I offer the elite program to. The other program will be limited to 250, including the people on the elite that join that. So the elite program includes the $499 product, the training and everything that comes with that. But for the extra $250 with the concierge support, the coaching calls, and the other pro traders coming in and so forth and so on, and the app, the trading app that comes with that, it's really, you know, basically it just pays me, it pays the programmer for developing the app and everything else. But I can only do it with so many people, and I'm willing to do as many as I can. And hopefully it makes sense, you know, to continue it that way for everybody. Then I can focus on a person individually and say, you know, hi, John, or Bill, or whoever, and spend time with that person. Each of us have got their own challenges, their own learning progress so far, and want to take it a step further. I can focus in on a person as an individual and take it from there. But whether you take the program as the elite program or just the standard package, so to speak, at $499, it's worth it for the time that we're going to be spending together. And once I'm full up, I won't physically be able to take on any more, you know, personally with the amount of people I can do. Hopefully that makes sense, you know, but I'm sure I'm one person, you know, as in I want to be personally involved with each of those people that are getting involved with me, and I owe them as much. Any
Great,
other
thanks.
questions? Sorry, Yumi.
But there was one from Ken. When does the program start?
Well, the program starts basically immediately. If a person took it up, what you'd get is you get full access to the program. You get an email firstly giving you access to the members area with all the videos and product to download, as well as a lot of other stuff happening inside there. There's a little video that will explain it once you're in there. With the coaching, once I have all the students signed up over the next day, then I can schedule. I'll be sending out emails. I'll be contacting you to try and schedule calls, to schedule meetings with you. So that will take place over a few days so that we can get the right time to speak to everybody. I mean, the right time to speak to everybody and deal with everybody and set out the program for them. So that will take a little bit of time, but once you're in, at least I know you're locked in. I can focus on you and go through everybody that's in the program one at a time. Hopefully that makes sense. I'm not sure who asked that question. Sorry.
It was from Ken, I think.
Ken. Okay. Thanks,
Yeah,
Ken.
from Ken. That's it as far as the questions go, and we have been here for over an hour and a half.
Okay, that's quite a long time. But
yeah.
I do look forward to seeing everyone tomorrow again. No matter what you decide today, we still have that last day's gift to give you. And I'll be around same time tomorrow. And let me just, though, before I share off, I just want to, while I'm on screen, wave goodbye to everyone. And then I'm going to share the screen again, just for those who are looking for that link, because as I said, you're not going to find this link anywhere else. It's only going to be on, did I share my screen? Yes, I think so. It's only going to be on, could you just tell me, please, Amir, if you can
No, not just yet, sorry.
Not just yet, huh?
Mm-mm.
All right, so Zoom's playing up with me again. Let me share it. Think. And I just have to get to, as I said, these PowerPoint things are giving me troubles today. But that's how it is when it's live, isn't it? So I'll just scroll right to the end so that you guys can get the get that proper link. But I want to thank you guys for being here and taking the time, especially on a Sunday. Hopefully I've given you something of value today, no matter what, that you can take and use in your trading when the market's open shortly. Sure, a lot of people are sitting with bated breath waiting for the markets to open so that they can trade the system. Goodness, it was a long presentation, wasn't it? With all these slides. And there I go through the whole lot again.
Sorry, Adrian, there. Just a note to all our attendees. Tomorrow we've prepared 3 gifts: the journal app, the report regarding the chart patterns, and the one from day 4 candlestick patterns. So you will get the basically three gifts. So all that was covered in this webinar, and what was covered in the previous webinar, and what will be covered in the webinar tomorrow. So just to repeat again, tomorrow we will meet at the same time, same place. So it will be 2 p.m. Eastern Standard Time. And hopefully I'll see you there. acceleratingprofits.com is the address where you can find the link for the next webinar in case you won't receive it via email. So
and a recording of this webinar.
Yes. Exactly, and that which will be up in a few hours probably. Yes. So yeah.
But this will be the last recording that I do put up. Tomorrow's will be recorded for posterity, but you'll have to be live to watch that, because I'm going to take the whole thing down after that, which is why I'm giving you guys advance notice also about this. After that, you'll find during the week, I also want to get some students involved for the regular Accelerating Profits program. But this part that I'm offering you now, just again, I just want to repeat, I can only offer it for a limited time because there is literally only a limited space for it. And I want to give you the benefit of being the first in the queue there, so to speak. Yep, and that's basically it from me. I want to thank you for your time today. It's been a very long session, but I look forward to tomorrow's as well. And if you are one of those that are joining me today with this, I look forward to seeing you on the other side. I mean, I'm still around. looking after my students on the other side of things, so we can always continue our discussions on the other side. My work week and day never ends, and it's fun. That's why I do it. Been doing this for a very long time, 10 years now. I want to, and I think I'd like to think that one of the reasons why I've been around so long is because I'm giving people, hopefully, as I mentioned in some of the other webinars, exactly what they want. I know what people need, and I've programmed myself to train them to do those particular things, and can adjust based on a person's individual needs. And it's something I really enjoy doing. So I would like to see you there on the other side of this, guys. All right, so I'm going to keep quiet there for a bit. I think I should just leave this on screen for a moment, because I know some people need to write things down, they haven't got a pen and so on, and might not get access to the recording till their day tomorrow and so forth. But we can also register for the new webinars Emir mentioned tomorrow, for tomorrow's webinar, by just going to that same link without the /VIP at the end. And within an hour or two, that link will be changed with the Zoom link for tomorrow for that. Otherwise, to get on either of these programs, /VIP, just like it is on the screen there. And it'll take you to a page with two choices, one on the left, one on the right. The one on the right chooses the $4.99 plus an extra, the difference, and it'll tell me that you are part of that particular program. I've got certain tracking and things that are going on with that one, so that I'll know this is a person for the program. And my regular, of course, VIP customers, either way, I treat everyone like a VIP. There's just an extra bit in the elite program. Okay. So thank you, guys. I will bid you adieu at this point. And it's been a great session today. Everybody that's been on here, I appreciate you being on and taking your time on a weekend to spend a bit of time with me. Please do still send me in your trade shots and comment on the page. And, I'm still looking at all of that. And the winners of these other free gifts that I've been giving away, you should receive your announcement soon as well. I'll announce who you are tomorrow. I'll first want to be able to speak to each of you individually, or at least contact you individually before then, so that you don't get a big surprise. Oh, what's my name doing? And then I'll announce you tomorrow. So be on the lookout also for those other valued gifts that I'm going to be giving away. So it's exciting, actually, and I'm excited for a lot of you. And even if you don't win anything, I think you're a winner already just for taking a step. And you're definitely valued by me for doing that. All right, thanks, Emir. I think we can end it there. Thank you to everybody. I'll stop sharing just now again, or am I sharing at the moment? I don't know. It says stop sharing. This thing's doing weird stuff for me today.
You were sharing, yes.
All right. Now we will end it here now then. Thanks, Emir. I'm sure everyone wants to get to sleep, get going with their lives, and maybe get going with the order. So thank you very much, guys. I see a lot of you on there. Hi, Earl. Hi, Herb. Who else? Yeah, I need to really. Rakesh, Ken. Thanks, Ken, for the question earlier. John Claassen. How are you, John? From South Africa, I think. Howard Moll. Howard, you're always here. Thanks for being here again. Emmanuel, how are you doing, man? And Danny. And everybody else. These are just the guys I could see on camera. Kay, William, Reginald, Joe, Alice, Kelly. Gosh, there's a lot of people on. That's great. Paul, Bailey, Jean, Chucks, Rob. I think there's more than one Jean. Yeah, Ray. Gosh, I'd be here all day if I had to read out all the names, as you guys can see. So thank you, guys. Cheerio. Have a good evening. Have a good night. For some of you, I'll see you on the other side. Cheerio.
Bye, guys. Until tomorrow. Cheers.
Cheers. Bye. Thanks, Amir. Bye-bye for now.